What is up, Forex Fun family? I am Darren, your host, and today I'll be showing you guys a really good trading strategy. And this strategy can be used on any chart, any market, and this trading strategy helps many beginner traders and people that is looking for a strategy that makes money over time. So the strategy, I do use it, and I have used it in the past, and this strategy works really well. And it consists of a couple of conditions, but we will go through all the conditions, the entries, and where you can enter at in your targets. So let's get into the video, guys, and let's make sure that you have your notebook so that you guys can write down what I'm saying and the important points, because this is life-changing and completely going to help you become profitable if you stick to the rules and conditions, because you have to wait for the conditions to have met before you can actually place a trade. Because if you do not wait for the conditions to have been met, then you might just fail that trade or have a failing trade, So let's just get into the strategy and let's do it. So as you can see, I'm on the JBP USD chart, the British pound and the dollar. So the first condition that we need to identify is the type of trend we are in. So as we can see that we are on a downtrend. The second condition is that we need to make sure that price is making lower lows and lower highs consistently below the EMA. So you need a 50 EMA indicator on the chart as well. So the first thing we need to do to identify these levels is to draw up a box. So I'll show you guys how to draw up a box and where to place this box. So the first thing you need to do is find the level that was recently broken and have a level right there. So as we can see, this is my area I've just drawn up. We can see that price has found support at this level and has broken this level to form a new low structure-wise. So as we can see from this point, price has pulled back up to this area of support that is now being retested for resistance. So as we can see that price has pulled back into this area, and what we want to do when price does pull into this area is that we want to drop down to a 15-minute time frame, a day trading time frame. So that's what we will do, is drop down to the 15-minute time frame. Just be patient with me. So we are on a 15-minute right now. We have just drawn up our level on the 4-hour. Remember, guys, the 4-hour we are going to be using for structured trend, and once price pulls into that area, we will also be using that as an indicator to when to sell. So once price has pulled back into this area on the 4-hour, we will drop down to the 15-minute, and we'll be looking for two main chart patterns. We'll be looking for a double top or a head and shoulders pattern. If you guys want to learn more about the double top and double bottom strategy, you guys can go find it on my channel. I will be making a strategy on chart patterns such as double bottoms, double tops, shooting stars, hammers, inverse head and shoulders. Those are just some of the examples I'm giving you guys, but I will be going through all those types of patterns and how you guys can use those patterns to your advantage. So let's get into this trade. So the first thing you need to do is look for a double top in this area once price has pulled back into this area. So as we can see, we do have a double top right there. So I'm just going to draw this and make this box a different color. Let's make it black. So as we can see, we make this box black. As we can see, price did make a double top. So the next thing is for us to look at the neckline. So we find the neckline and we want price to close below that neckline. So let's find the neckline. So the neckline of the double bottom is right there. And what we want to do is we want to enter after the candle that which has closed below that neckline. So as we can see, we do in fact have a candle that has closed below. So, and you can put your stop loss above this box, which was the double top area, and it depends on your risk to reward ratio, but I like to use a 1.4 to 1 risk to reward ratio, just because that this risk to reward ratio has a higher chance of getting smashed. So as we can see, in fact, that trade played out beautifully. As we can see that our entry was on point and that our risk to reward ratio has worked out in our favor. So let's just go over this again. So on the 4 hour, we are looking for trend and structure. And once we've identified trend and structure, we want price to be making either, if you're in a downtrend, constant lower lows and lower highs below the 50 EMA. Right guys, we are on the Aussie dollar, and I want to show you that this trading strategy works in any markets, whether it's cryptocurrency or forex or stocks. I just want to show you that this works in many markets. So we are going to follow the same conditions and rules, which are price needs to be trending below the 50 EMA and price needs to be making constantly lower lows and lower highs. So we also need to identify the previous level of structure which was broken and most likely going to be pulled back into, and using this area for resistance. So we have price which has found support right here, and once price has broken this level right here to form a new low according to structure, and price pulling back into this area, we are going to look for an entry on the 15 minutes. So when we're looking at a 15 minute, we are looking for two types of candlestick patterns. We are looking for a double top or a head and shoulder pattern. So let's drop down to the 15 minute. As we can see, we had the double top right up here, so which is not unusual. We are in this area of structure, so it's important that you make sure that you understand these chart patterns. And if you want to learn more about these chart patterns, I do have a video on double top and double bottom trading strategy that you guys can check out if you guys do not know how to apply these rules, because this chart pattern does acquire its own rules. So once we have acquired these rules, we are to look for a double top. Once we have identified a double top, we want to identify the neckline, because we are going to be using the neckline as an entry point. So we want price to close below the neckline. So that means price is most likely to continue in a downwards direction. So once price is closed below the neckline, which is this big red candle over here, we can have our entry. So my entry will be on that candle. My stop loss, I'll put it, normally I put my stop loss, if it's a downtrend, I look for a recent area of structure that was broken, such as right over here, an area of support right here. So it's up to you whether you want to put your stop loss above the main level, but as an experienced trader, I prefer to put my stop loss just above an area of support, which means that price has broken that area in the past and now it's becoming resistance. So price is most likely not to break above and close above that level if we are continuing a downtrend. So right now, as we can see, that my stop loss is above a level which is as well above the neckline. That's what I meant about an area of support which has become resistance as well. So now we are looking at our target, which I normally use a right. I'm going to show you a bullish version of this trading strategy, just so you guys can have more confidence and feel more confident that you guys are able to see both bearish and bullish examples. So it's the same thing, just reversed now. So we want to identify the trend. So we are in an uptrend. Price is constantly making higher highs and higher lows above the 50 EMA. The next thing we want to do is that we want to draw up our level. So our level will be based off previous resistance that is going to be now be retested for support. So the roles have reversed because we are in a bullish market right now. So we want to draw up our levels, and right after we draw up our level, we want to drop down to the 15 minute to have our entry. And once price has pulled back into this area of resistance that is now being retested for support, which price most likely will find support because we are in an uptrend. So once price has pulled back into this area, we want to drop down to the 15 minute. Right now we are on the 15 minute. We are in this area right here with the huge rejection candle, but we are looking for a double bottom right now. So if you guys want to check out or learn how to trade the double bottoms trading strategy, there is a video on my channel that you guys can learn how to make use of this strategy. And on that video I teach you guys how to identify and how to use these type of chart patterns. So right now we can see that we have a double bottom right here. Price has been rejected the main area of resistance, which is now being retested for support. So right after price has formed the double bottom, we want to enter right after the neckline, which is right there. So our entry will be the candle that closes above the neckline. So our entry is right over here. So our entry is right over here, and you can put your stop loss below this level, this area right here of the double bottom. And I normally have a 1.4 to 1 risk reward ratio, just because this is an area, this is a type of risk reward ratio that is most likely to get smashed more than half of the time. So as we can see, this trade out played out beautifully. We did smash our TP right there. So I will try to find more examples of this type of strategy. As we can see, we are on the 4 hour on the British pound versus the Japanese yen. Right now we have an area right here, which was an area of resistance that became an area of support. Don't worry if you guys do not draw up the levels correctly. I have had my own time to learn how to draw up the levels correctly and to know what levels are actually important. But as we can see here, that this area right here, price has broken this area of resistance and pulled back to this area for support. So once price has pulled back into this area on the 4 hour, we want to go to the 15 minute and look for an entry. So as we can see, we will have a couple of entries or a couple of trades we can play out, because price has not only used this area for support once, but 3 times. As we can see, price has made a double bottom on the 4 hour right here, but we were looking at the 15 minute on this area right here. So we will drop down to the 15 minute day trading time frame. As we can see, we have a double bottom right here. We have a double bottom right here. So I'm just going to change the color of this box so it's more apparent. So what we are looking for right now is a double bottom which has been identified. The next thing is to identify its neckline. So there's the neckline of the double bottom. The next thing is we want price to close above this area so that we can have an entry point. So as we can see, we have a price closing above this area right there, and we want our stop loss to be below this box, which is the termination box for the double bottom. Like I said again, if you guys want to learn this type of trading strategy, which is called the double bottom, double top strategy, there is a video on my channel which you guys can go and check out and learn about the strategy, because it is a strategy that will make you money over time. So as we can see, our stop loss is below this level. We will be using a 1.4 to 1 risk to reward ratio. As we can see that this has smashed our TP indeed. Like I said, this risk to reward ratio I use because it has a chance of getting smashed more than half of the time. So that means my trades are better and I have more consistency overall. So